this is Savannah Zonawecker with Keller Williams. You're watching Real Savvy, a show of interviews, updates, and absolutely no outtakes. Before I introduce Stephanie, I'm going to give a very quick market update. So in Lake, Osceola, Orange, and Seminole, we've had 738 listings the last 7 days, 1,546 pending, and 927 sold. And then just in Orange County, we've had 322 listings, very low, 688 pending, and 427 sold. So obviously you can see it's still a seller's market. And now after that's out of the way, hi, Stephanie.
Hi, Savannah. How are you?
Good, good. I'm going to have you introduce yourself, say who you are, what you do, and why you do it.
Awesome. So hi, my name is Stephanie Roussell. I'm a loan officer with JW Capital. And I chose to come into the industry of mortgages because I wanted to help people. I worked in the medical field for 14 years, and it's just my second nature to have a heart to help people. Some years back when I purchased my first home, it was not the best experience on the lending side of things. Then I came across an amazing mortgage loan officer who just convinced me to come into the industry. She was very joyful about what she did, and she was making money. So I decided that I wanted to do the same thing and just help people change their mindsets to know that ownership is very much attainable. And, it's just a matter of having the right education, the right person in your path to hold your hand along the process and take you to the closing table.
Yeah, I love that. I love that from bad came good, and now you have that passion. That's awesome.
Yes.
So I'm just going to ask you a few super basic questions. So the first one is, what do you look for in a lender? Obviously, you just mentioned a little bit how you had a bad experience. So what should people look for when they are trying to pick that lender?
Right. That's a great question because, typically first-time home buyers, the reality is a lot of people don't even know that we exist. Had I not been through the process myself, I wouldn't know that, lender, loan officer exists. So I would say really someone who's going to be with you. This really is a team effort between your mortgage loan officer, the realtor, and together our interest really is in the best interest of the client. So you want to make sure that you have someone that's accessible, that's going to be able to answer the questions that you need. One of the benefits of having someone who's either on the direct lending side or the broker side is that we are more accessible than the bank. Typically we work beyond the typical 9 to 5 banking hours. We're available on the weekends. Sometimes that may even, require being available on a Sunday, which is, the day that most families take for family. But we understand that business is on the line here. Financials are on the line. So if it means, hey, I have to pause and take some time to be able to, submit this offer, then that's what it takes. You definitely want to look for someone who is going to be honest, upfront and honest. I think honesty is the best policy that can explain the process from A to Z, that is going to be upfront about things because you don't want any surprises. Someone who's going to set proper expectations for you from the very beginning. And that's pretty much it in a nutshell.
Yeah, no, I love that. Yeah. And I know that you said you're very honest, and I can attest that is true.
Sometimes I'm too honest. Huh?
No, it's good because I've sent people to you that have an idea in their mind of what they can get or what they can really afford. And you're like, sweetheart, maybe you need to take a little longer just to save up more. And you're not going to push the envelope just to get that deal. You don't have that commission breath, as we say in the industry. Like you really want to make it right for those people.
Right. And that's important because, the truth of the matter is everyone's different, right? That's what makes us unique. We all have different qualities, and you will come across every so often the loan officer that may not take the extra mile to give someone the background, the explanation of what it takes to truly obtain ownership. Everyone that comes my way, I understand from the very beginning that they're not necessarily going to have their credit where it needs to be. They're not necessarily going to have the savings that it needs to be. So am I going to turn someone away simply because their credit isn't where it needs to be and tell them, hey, come back to me in 3 to 6 months? when things are better. No, my job, while I, have the opportunity, and you're in my presence, I'll be able to explain to you what exactly is needed. Because if you don't know what's needed, if you're not educated on the thing, how will you ever be able to get there? So I think that a big part of what we do, and maybe even what sets me apart, is that I truly love educating people, because I've been on the other side, and that's a major key. And unfortunately, a lot of people don't take the time to do that.
Yeah, I agree. I experience the same thing. So I want to go really quickly over the breakdown of the couple types of loans that there are out there that the general public uses. There's probably half dozen general ones that people use. There's a lot of other ones that some people like to
Right.
get fancy with. But if I'm a first time home buyer or even just refinancing to upgrade a home, what are my options?
Right. So yeah, there's definitely a ton of loan products out there. And typically the ones that most people are aware of are FHA. I'd like to say that that's usually the one that, a first time buyer is going to qualify under, because they're typically looking to put the least amount of down payment possible. And also, if they're maybe a little more credit challenged, then that's usually where we're going. And also, I mean, rates are phenomenal right now, as everyone knows. It's funny because, due to COVID, we thought that we didn't know what was going to happen with the market. However, it's been really good to the housing market. So, you have your FHA, you have your conventional. Now, something that a lot of people are not aware of is that with conventional, they have a special program. So it's called the Home Ready program. And with that, if you're a first time buyer and you're in a certain income bracket, then you could potentially only be putting down 3%, which is phenomenal. Now, there are some stipulations to that. It's all dependent on the subject property, which is something that, I may not offer it right off the bat, because we really don't know where your income is going to be for the address of the home that you're going to find. But I like to keep all options open. Our job as loan officers is everyone has a story. So there's not one loan product. It's not a one size fits all. It really is a case by case scenario. And we're really just putting the pieces to the puzzle together, and trying to see what benefits you the most. There are some myths out there. A lot of people think that, you have to put 20. Oh my gosh, if I don't have 20% down, I'm not going to be able to buy the house. And that's not the case. Now, there are benefits if you do have 20% down, as it pertains to a conventional loan, but it's not required. We also have VA loans. We have USDA loans. So with a USDA loan, the benefits of that is that you have no down payment. It's a 0% down payment, 100% financing. However, here in Florida, there may not be very many areas left that are USDA qualified, but that's where Savannah comes in place. She'll check out the property and she'll be able to look into all those details for you.
Yeah. Okay, great. So yeah, we just have the VA, FHA, conventional, and USDA. Obviously, VA you can only get if you or your spouse, right? It can't be like your kids can't get it. It's just spouse or.
That is correct. Yes. For the VA.
That.
Yes, that is correct.
Yep. Okay, awesome. So you talked about the myths versus, right, like facts versus fiction. So I wanted to ask you a few of those too. Something that people ask me and that I tell them all the time about my story is, do you need 2 years of work experience to qualify for a loan?
Okay. So yes, typically, right? You need 2 years of work experience. As long as it's in the same line of work, even if you change jobs, let's say, 3 months out, as long as it's in the same field, then you're good. And you just always want to make sure that if you're changing jobs, it's for progression to make more versus making less, because if it's to make less, then it could be questionable when it comes to underwriting.
And then a cool trick that I know though, is that I'm sure you know it too, but I just like to say it because I feel smart. If you went to college, let's just say for engineering, and then you have an engineering job, you've only had it for 4 months, that still counts as 2 years work experience because they can count your studies because it's in the same field.
Yes, that is correct.
That's so cool.
It
Sucks for
is. It
me,
really is.
but
I mean, it's kind of like a benefit, you went to all this schooling. I mean, that's the least they could do, right?
yeah, agreed. And then another fact versus fiction is I don't make enough to qualify to buy a
Yeah.
home.
Well, that can be fact or fiction, right?
Mm-hmm.
But I always say mindset is everything. A closed mouth doesn't get fed. So you really don't know until you ask, until you have that conversation. Yes, it does matter what your monthly gross income is, but I would say, don't deter yourself from, thinking that you can obtain ownership. And hey, at the end of the day, maybe you're not making what you need to make right now to qualify, but that doesn't mean that you'll always be in that position.
Yeah. Yeah. I love that. Cause I love that you always say change your mindset. And that's true. Like if you're only making $8 an hour, minimum wage is going up. But if you're at that rate, get a side hustle or, think more of yourself and try to get more, go to a trade school,
Right.
make your life better in that way and for your legacy too.
Yeah, definitely.
And then quickly, as our last thing, I want to talk about first-time home buyer programs. We get a lot of questions about those, and I know that there can be some pros and cons, and everyone thinks it's this beautiful, wonderful thing, but I always tell them nothing from the government is free. So
Right. I'm so glad you asked that question. I think that's my favorite question. Because you don't hear many people talking about the cons of it, right?
yes.
You hear people talk about the pros, down payment assistance, yeah, financing.
Hmm.
And it happened to me, prior to coming into this industry. I was like, great, I'm going to get, down payment assistance. But upon entering this industry, I realized, wait a minute, this is not exactly what it's cut out to be, especially in the market that we're in. So, I definitely, take the time to go over those details with clients. I go over the stipulations, which is what a lot of people don't talk about. They don't necessarily tell you right off the bat that the interest rate can potentially be higher. So what happens when you have a higher interest rate? Then if you want to be in a certain bracket per month and you tap on a higher interest rate, you're already increasing your monthly mortgage payment. They don't necessarily tell you right off the end that for a lot of these programs, you have to live in the house with it for a certain amount of time.
Mm-hmm.
You can't refinance within a certain amount of time, or you'll have to pay the money back. You can't move within a certain amount of time, or you'll have to pay the money back. A lot of times they're also tacking on a second mortgage on there because they want to make sure at the end of the day, if you do go against what they've already put in place, they're going to get their money back one way or another.
Yeah.
Another thing they don't necessarily explain right off the bat is that your debt to income ratio cannot go over a certain percentage. So, right off the bat, again, when I'm speaking to clients, I'm already putting the puzzle together in my head. Not that I'm prejudging by any means, but, realistically speaking, if I come across someone that maybe they don't necessarily make a lot per hour and they have, $300 car payment, they have student loans and a few other debts that we have to inquire, that's already pushing us, either to the max or over for the debt to income ratio. So that already puts in my mind, they're probably not going to qualify for down payment assistance. Another thing to factor in with down payment assistance programs is that they're typically a 60-day closing. I like to say minimum.
Ooh.
I like to say minimum. Now, what happens in the market that we're in, having to have a 60-day closing, that literally narrows down your chances of getting this house. Why? Because right now in the market that we're in, you have multiple offers for one house. So if a seller needs to sell this house within 30 days, they're not going to necessarily take in consideration, the fact that they can't close until 60 days. So that's something to take in consideration as well. Another thing is there are also grant programs out there. There's county programs that, offer grants. There's programs that we have access to that are grants, meaning that you don't have to pay the money back. However, there are still stipulations. Yeah, it might be a 30-day closing, But when they smack on a 5 to 6% interest rate, again, that's going to automatically put your monthly payment up. So, those are definitely case by case situations. I don't want to knock it 100% either, because sometimes you may just come across someone that's what they need to get their foot in the door. Not that they don't necessarily have the money to afford it monthly, but they're just maybe struggling to get some of the finances together, up front for the down payment or the closing costs.
Yeah. Yeah. And that's something else we try to negotiate as realtors. I try to negotiate your closing costs as much as I can. Obviously that's hard in this market, but I've done it several times, even in this market with multiple offers. You just have to know how to finagle. And that's why you hire people. And I want to point out that in this process, with the loan company, with the mortgage people that are giving you that money, and with the sellers, everyone wants to limit risk. So you are coming to them, you want to give them the least amount of risk. And that's
Right.
why some people charge you things in order to take on your loan. That's why sellers go, ooh, 60-day close. It's not because they're being mean. I know a lot of people get discouraged, but you have to understand it from their point of view. They want a smooth closing. They want to get their money back. So yeah, it's a crazy world out there, but we're here to navigate with you through it.
Yeah, definitely. And our job is really to, again, set proper expectations and try to make the process as smooth as possible, and I always like to say, just like I'm honest, I literally set that standard from the beginning with my clients, is that honesty is the best policy. I understand, and rightfully so, that sometimes, clients may be like, hey, I'm sharing my information with you. Yeah, that's true. But we do the same thing when we go and buy a car, and you don't even build that deep of a relationship with your car salesperson as you do with your loan officer. Let's be real.
Yeah.
But at the end of the day, it's like saying we're the advocate, or the lawyer per se, then before the judge. And the judge, I like to say, is under. So our job is to catch any potential red flags, any hiccups in the beginning. So that way, by the time we get to underwriting, hopefully it's as smooth as possible. Or, we know exactly, we've already been forewarned. So we kind of know how to go about things with maybe letters of explanation and things like that.
Yeah. So if you have a bankruptcy, let Steph know so she doesn't get caught off guard when underwriting's like, hey,
Yeah.
Steph, what's this? And she's like, because it happens.
And I'm so glad you mentioned that, because see, here's the thing, right? I do ask that question when I do my consultation. However, because sometimes we just don't know. Sometimes people may feel that they don't need to mention it, or they may think that because it's been a certain amount of time, it may not, play a role. However, if you have a bankruptcy and you don't tell me, we are going to find out, because they do they run certain things behind the scenes. So it'll come up. So it's just best to, be upfront with everything.
Yeah. Don't be embarrassed. We've all been through it. I'm sure
Right.
we've been through worse than you have financially. So no
Right.
judgment. We're just here to help you.
Definitely.
Well, awesome. Thank you. This is obviously a very shortened version of everything that we would go into on a case-by-case basis. So come to our home buyers classes or just give us a call and we will consult with you guys personally.
Definitely.
It was great having you, Steph.
Yes. Thank you for having me, Savannah.
Bye.
Bye-bye.